Hi, everybody. Doug Jenkins with the Findlay-Hancock County Chamber of Commerce, joined by Bob Bobek of GJM as we continue to look at the issue of employee retention. Certainly that has been probably the biggest story when it comes to business here in 2021, and in terms of people trying to just retain the employees that they have. We've seen the hiring, and I don't necessarily want to call it a crisis, but it certainly is at a boiling point of sorts. We want to make sure that our members are able to hold on to the employees that they have. Bob Bobek with GJM is here to give us kind of a rundown on a lot that's going on with the employee retention credit, which is aimed to help businesses retain their employees. It's right there in the title, Bob. It seems a little self-explanatory, not right, but there's a lot that goes along with it.
That's right. That's right.
So, Bob, I'm going to let you've got a presentation. We'll have you go through that. And then after we do that, we'll go through some question and answer that.
All right, sounds great. Good morning, everyone. So there's my quick bio, real quick. I've been doing this about 35 plus years with Gilmore, Jaison, and Mahler. And, right as soon as the pandemic started, and this was back in early March, we started to see the orders coming out from the various governors shutting down states and everything. And we said, wow, this is going to be, really tough on businesses. Almost catastrophic. And so we start exploring all the programs. I remember watching Governor DeWine's first presentation, and he talked about some SBA programs that were coming out. And right away, we jumped on that and we start looking at the various SBA programs, the economic injury disaster loans, and then there was the CARES Act. And in that CARES Act, they provided for two types of stimulus. And basically, in the CARES Act, they provided for either a PPP loan, which I know a lot of businesses went and sought and received, or the employee retention credit. So when the CARES Act was first passed in March of 2020, you had to choose. And then the last law signed by President Donald Trump on December 27th of 2020 amended that and says now you can use both. So if you did get a PPP loan, now you can go back and amend your tax returns and claim the employee retention credit. And we're finding this very beneficial to provide stimulus dollars into businesses to help them retain your employees. And so, for 2020, you must follow the requirements of the CARES Act for the ERC. And so there's going to be two sets of rules, one for 2020 and one for 2021. Which we'll be going through. And in the law that was passed on December 27, 2020, extended also these ERC tax credits, employee retention credit tax credits, to June 30th, 2021, and changed the rules for 2021, which we'll be going over today. And then when they passed another law in March 12th of 2021, this was the American Rescue Plan Act. This is the last major stimulus act passed. They extended it further. So now you could claim these credits all the way through December 31st, 2021. So it did provide a lot of opportunity here. The credits are allowed on your 941. This is a credit against your FICA tax. You can now go back and amend your 2020 941s to claim these credits. So every business has already filed their 941s. So you have to go back and amend it, but we're looking at this for a lot of businesses and finding out that they're eligible for a significant amount of credits, and we're helping them amend these returns. So the careful thing that you have to watch is that wages can be used for both your PPP forgivable expenses and the employee retention credit, but not both. So you got to kind of balance the two. And for many organizations, they've already filed and got forgiveness on their PPP forgivable expenses. And a big chunk of that was wages. So we'll talk a little bit more about that, but we're finding out for most organizations, they can get both. So just by balancing those two, you should be able to get both. And so the order that they recommend is you use the ERC first, and then any additional wages you use for your PPP loan forgiveness. Now, I know a lot of organizations already filed for their PPP loan forgiveness. And a lot of them use exclusively wages on their applications. So let's go through a quick example. Let's say that you had 500,000 of a PPP loan, but the wages you put on the PPP forgiveness application was $1 million. You want to have more than enough. You only need to use the 500,000 necessary for the forgiveness of the loan, even though you claimed $1 million on that forgiveness application. That additional 500,000 is now freed up and can be used for the ERC. So it's not that you used it on the application, it's what actually was necessary to receive full forgiveness. So again, the CARES Act was passed in March, at the end of March, I think it was March 27th, actually, in 2020. And I know we jumped on right away. We had our first presentation on it like 3 days later to go through everything. And so when you start looking at the employee retention credit was not very beneficial in 2020, as we'll walk through right now. So everyone did the PPP loans. But it's still worth going back and look. I just did a small company with about 15 employees in 2020. They qualified and they were able to claim about an $80,000 ERC credit. So we're still talking about a significant amount of money here. So the two tests, you have to meet one of these, not both, just one. And so the easy one is the second one. It's a math test. Your revenue or your gross receipt needs to be down 50% in any quarter of 2020 as compared to the same quarter in 2019. So in my example, my client was down 50% in the first quarter. So they qualified. The other is a little more difficult, but we're finding a lot of businesses that don't qualify for the 50% reduction can maybe qualify under being closed or partially closed during the pandemic. And so it doesn't mean you need to be 100% shut down. It means that you are partially closed due to some sort of government order that closed your ability to work. So again, a lot of times we're seeing this with construction contractors. They were not closed down. But let's say they had some jobs in Michigan, and those jobs were shut down by the governor's order up in Michigan. And so they would qualify if that exceeds 10% or more of their revenue for that year. So it's not the 50% for that, it's a 10% test. And so as long as you were decreased your revenue by about 10% due to a government order, you still also qualify for the credit. So again, this is the one that takes a little bit more, thinking and analyzing what happened back in the pandemic. You got to go back and think, well, what happened those first couple of months, and what jobs were maybe shut down? What was I forced to do that changed the way I operate? And was it due to a government order? And you might qualify for this credit. Now, this credit is 50% of up to $10,000 in wages and health benefits per employee. And so you get a maximum $10,000 per employee for the whole year times 50% or a maximum credit of $5,000 for the year. And once you use the $5,000 up for that employee, you don't get any additional credit. And this is only for the quarters you qualify due to either a 50% reduction in revenue or this government shutdown. So again, you just got to look at which quarter you might qualify and then analyze your payroll and see what type of credit you might be eligible for. The last little thing that you have to look at, and it's not little, it's significant actually. So the last thing you need to look at is your number of employees. And believe it or not, this changed. For 2020, it's one number. For 2021, it's a larger number. So a small employer for 2020 is defined as anyone with less than 100 employees on an average FTE in 2019. So if you have less than 100 employees, you get this credit for everyone. If you're over 100 employees, you only get this credit for employees that you continue to pay, but they weren't doing their normal job. They had a reduced amount of work they were doing. So we see this a lot with the automotive companies, where the second quarter, they really got hit hard when the big three shut down. And so they continued all their management, continued to work, got their regular pay, but they were maybe only working at 50% capacity. So then 50% of their wages would qualify. So 2021 is where we're seeing the big improvement in a lot of eligibility. So we still have that closed or partially closed test, but now the revenue is only a 20% reduction. So now it's only a 20% reduction any 21 quarter as compared to the same quarter in 2019. As you can see, we're always comparing to pre-pandemic. And it's still $10,000 per quarter of qualifying wages and health benefits, but now it's 70% of those. And it's capped at $7,000 per quarter, not for the whole year. So if you qualify for all 4 quarters, you are eligible for a $28,000 credit, up to $28,000 per employee for each quarter. I mean, for the year. So it's a huge amount of money that's that's available here. And now they raise the small employer test to less than 500 employees. So a lot more businesses qualify for everyone in 2021, simply because that 100 was raised to 500, and that revenue test was reduced from 50 to 20. So we're seeing a lot of organizations qualify for 2021, and we're seeing some significant credits here. So how do you calculate your revenue or gross receipts? It's all sources of gross receipts into your organization. So it's your sales or revenue, less returns and allowances, plus any investment income, interest, dividends, rents, royalties, annuities. Also, your PPP loan forgiveness is considered income for this test. And any proceeds from selling any assets, investments, and anything you might have sold, gross receipts from that minus the original cost of those assets. And then this also, if you're not-for-profit, you qualify for this credit. And so for not-for-profit, it's the same beginning, the revenue, less return allowances, and a lot of the same items, again, investment income, interest, dividends, rent, royalties, but they also include now contribution and gifts, grants, member dues, annuities, PPP loan forgiveness again, and proceeds from the sale of assets again. So just to expand a list of revenue here for not-for-profits. Okay, one important note, if you're a taxable entity, if you get this credit, let's say you get a $100,000 credit for 2020, you have to reduce your wage deduction by the same 100,000. So in theory, this is a taxable stimulus benefit. So whatever you get as a credit, you reduce your deductions on your tax return, so it increases your taxable income by equal to the amount of the credit. So unlike the PPP, which was in the final law passed by Donald Trump at the end of December was not taxable, this is taxable. And also because this is the IRS and we're following the Internal Revenue Code, okay? So you must follow all the aggregation rules in doing your testing. So if you have any companies under common control, and that's greater than 50% ownership, or brother sister controlled companies, the attribution rules found in the IRS, you must combine all these for your employee testing and your revenue testing to see if you qualify. So here's an example. This is 2020. And so this is an employer that has more than 100 employees, so they're not going to get a full credit. And so their weekly gross pay is $1,500 for, let's say, Chris was working, okay, and she got paid wages of $12,000, but she was only working at 40% capacity, so only 60% of her wages qualify. So that's the $7,200 plus health insurance, $8,400. You're under the $10,000, so all $8,400 is qualifying for the credit. You get $4,200 for Chris. Deb's not working at all, but you continue to pay her, so you get all her wages, okay? So those add up to $16,000, but again, you know, well, actually she's also not working at the same level, $9,600, I'm sorry. And you pick up her health insurance, but now as you can see, she's over the $10,000, $10,800. So she's capped at $10,000. So you get a maximum of 5,000 for Deb for the whole year. So these two individuals add up to 9,200 in credits. Your taxes at 30% on that is 2,760. So the company keeps cash flow of 6,440. And again, this is a refundable credit. And here's 2021. Again, a lot easier because we're under 500 employees now. So 7,000, 1915, 8,950. So Chris qualifies for full wages and health insurance paid on her behalf, 8,950. So she gets 70% of that, or 6,265. And Deb, who's making 15,000 plus health insurance at 16,950, is capped at 10. So 10 times 70% of 7,000. So this year for those same two employees for 1 quarter, you get 13,265. Pay taxes on it, 3,980. After-tax cash flow of 9,285. So as you can see, this is just 2 employees, so it can really add up quickly. Again, the credit period starts on March 13, 2020 through December 31st, 2021. It is a refundable credit. So if it exceeds the portion of your Social Security tax, you can get it refunded. You claim the credit on your federal form 941, is your payroll tax return. And then any credit earned in that first quarter, because there's theoretically about 14 or 15, well, no, about 18 days in the first quarter before the law was passed on March 13th through March 31st. So you can claim that on your second quarter. Again, you get to amend your 941s to get this credit. You have up to, normally you have up to 3 years to amend those returns from the date they were originally filed. For this credit, they extended that to 5 years. So you have to have 5 years to make do this calculation, make a determination, and then claim your credit by amending your tax return. So final thoughts. If your business qualifies, this ERC could be a powerful tool in the pandemic recovery. It's a good stimulus source of dollars here. Be sure you clearly understand requirements. I mean, unfortunately, this is a credit under the Internal Revenue Code, so it gets very complicated on all these rules. The PPP alone was much easier. That was an SBA loan program, and so they didn't have as many complicated rules. We encourage you to work hard with your trusted advisors. Don't go at it alone. We've been analyzing this a lot for organizations, and we're here to help if you need us. So again, we just get on a phone call, spend 10 or 15 minutes, ask a couple questions, see if there's something that we should maybe look further into, and then see what we can help you find. So thank you. And now we're going to turn it back to Doug.
Well, thank you for all of that, Bob. We do appreciate the information. I've got some follow-up questions, and there's a wealth of information there. And in fact, that's kind of where I want to start. It's a lot of information. It's a fairly complex program, especially if you don't live in this world. And I'm just trying to look at it from the standpoint of some of our smaller members who, sure, a lot of them are having to do more work right now rather than run the company. They're kind of running the front line of the business because they're down employees. You mentioned it in the closing, but just talk a little bit about how some of that complexity could drive a small business away from applying for something that could be a big benefit from them.
Well, yeah, again, it is complicated, and you're going to have to seek the advice of your accounting firm. A lot of small organizations maybe are using a payroll processing firm, and those organizations can help calculate this credit or work with your accounting firm. It is complicated, so you're really going to have to get someone to help you. There are organizations out there. I know there's a lot of organizations out there, boutique, especially credit firms, sending out a bunch of emails and say they'll calculate it, and they usually have a platform where they're going to charge a percentage of the credit, and that's how they come up with their fees. Most accounting firms, us being a CPA firm, we're not allowed to do that, so we can only charge an hourly rate. But we're doing enough of these that, we're making it affordable.
Right.
We can.
But and to piggyback that on that, though, we've been doing this for a little while now, and you've been able to see the benefit for businesses at this point. And I'm not going to ask you to name specific businesses, but have you seen success stories where a business maybe they didn't think they were eligible, or they they were a little apprehensive about the program? Because I think we're all apprehensive when the government comes out and says have some money. It feels like there's strings attached with that a lot of times, but certainly, this can be a benefit to businesses. What have you seen in the real world with this?
Yeah. So we're seeing a lot of these. I'll be honest with you. I'm doing a lot of these reviews almost daily. A lot of companies are looking at it. I'm seeing some really significant credits because when we're thinking about under 500 employees in their first quarter, if you qualify and you have 300 employees, it can add up to a lot of dollars to have 7,000 per employee. And so, the math test is the easy one. If you pass that, that's real simple. It's that government order one, and right. We're seeing that. So we're seeing large organization with 300 or 400 employees failed the 20% or 50% test. But then we sit down with them, we analyze it, and we find out that there was a portion of their business that the government ordered it shut down. And so we see that like in nursing homes.
Right.
They had a respite program. So respite is where your loved one's not living there, but you take them there for 2 weeks while you go on vacation and stuff like that. And that program was shut down by state orders.
Okay.
And if that made up 10% of your business the year before, you qualify.
That's a good example. That's a real good example.
Yeah. And we see this with contractors too. Again, a contractor, they're still essential, but they had a big job up in Michigan because Michigan shut down a lot. And they were forced to stop working at a job. And it was 10% of their business again. And they qualify.
Are there industries that you're a little surprised to see are still impacted? Obviously, we think about restaurants and when they had to close their doors a little over a year ago, and then they were able to start doing carry out, then they were able to open, but in limited capacity. And we all think restaurants it's hard to get anywhere on a Friday or Saturday night right now, but a lot of that still has to do with reduced capacity. And so they may not be bringing in what they were, in 2019 at the same time as a result, even with the carry out option that they may not have had before. Are there other industries that are still being impacted in adverse ways that people may not think about?
Yeah, so construction industry always lags.
Okay.
Always lag. What happens is that what they were working on in 2020 was probably put in place in 2019. They had architects wrote up the drawings and then they start building it in 2020. And so what happened in 2019, a lot of that stuff just stopped happening. Mm-hmm. People were not thinking about building a new building or expanding. And so they're getting impacted this year. Okay. And then a lot of your heavy highway contractors or contractors that relied upon ODOT funding, Ohio Department of Transportation funding, and that's tied into gas tax. And, during the pandemic, people weren't driving. They were staying home. And so that revenue is way down. And so they are postponing or slowing down projects for those contractors until the money comes back. So
that's a good point.
Impacted today. Nursing homes are still struggling. They were hit really hard. And again, I think they got a long turnaround period because they got trust now where, people are afraid to go into nursing homes.
Yeah.
And so, that's going to be a slower build back, I believe.
Bob, the bottom line on this is don't go through this alone. There was a lot of information you gave. I think it's extremely helpful for our businesses and our members. But to try and walk through this alone, that feels like a minefield waiting to happen. You want some outside advice here. Definitely.
And the other comment you made earlier too about concern, this is going to be claimed as a credit on your 941 tax returns. And so there's not like an application you apply for forgiveness. If you qualify, you claim this credit on your 941 and you get it. And then then the IRS has rules on auditing. That's been there for ever since IRS came to existence. And so they can select any of these returns for audit. And that they intend to, review it to see if you qualify. So again, we're encouraging to make sure you do all the proper tests and procedures and keep documentation of why you qualify. Because in an unfortunate event that, you get selected for audit, you would have to demonstrate this to them.
Right.
And so it's like nothing else on your, same thing, anything else on your tax return. It's exactly the same thing.
Bob, if people have questions for you specifically, what's the best way to get in touch with you?
Probably an email. My email, I believe, is on the last slide. Is it not? Let me just go. Nope. So I will give it to you. It was a first slide, actually, or a second slide at the top right. But it's rbobek, BOBEK, at gjmltd.com.
One last question for you, Bob, that I just happened to think of. So we talk about, so you can get these credits, which means money coming back to you or money that you don't have to send to the government. And, some people may hear that and think, well, okay, that's money just going into the owner's pocket. But I feel like that's money that can either be reinvested in a business. It can be used to help bump employee pay, to help retain employees like we were talking about at the beginning. It can be used to help bring on new employees if you need new employees, that type of thing. So it gives you, in my estimation, it gives you options. That
it does. There's no strings attached in how you spend this money.
Yeah.
You can spend this money for whatever you want to better your business. And another thing, I talk to clients that are, thinking hard about it. I said, you got to really understand that your competition might be claiming this credit.
Mm-hmm.
And that's going to give them more surpluses to compete against you.
That's a very good point. I was thinking about that during your presentation, that if I owned a business and thought my competitor was doing this, I would have to think very strongly about doing it just so I can stay on equal footing.
That's right. That's right. Especially in some of those hard-hit industries.
Yeah.
Yeah.
All right. Well, Bob, we appreciate your time with this today. And again, Bob's contact information, you can just rewind the video and find that. You heard him say it there just a second ago. Keep coming back to the Chamber YouTube channel. Continue to put more and more information out here about a variety of topics, but certainly when it comes to employee retention and recruitment, that's a big focus here in 2021. This is a big way you can retain your employees and invest in your business, which is certainly something that we want to see here. So, Bob, thanks again.
You're welcome.
We'll see you next time on our YouTube channel.
Take care, everyone. We'll see